So today's video is based on revaluation. Revaluation we all know, one generalized rule: when you prepare revaluation account, on debit side and credit side, what do we put? Debit side, as you know, we put all bad, and credit side we put all good things. Good things are unrecorded asset, increase in asset, decrease in liability, where bad are unrecorded liability, decrease in asset, and increase in liability. These are common things which we have. So now we are trying to discuss some of these adjustment. We know credit side, if debit side is more than credit side of reval, we will have loss, otherwise we'll have profit. If it is admission and say your balance sheet has names of A and B, this profit goes to A and B. Whereas in retirement, you in your balance sheet you might have A, B, C as name and one of them retires. So this reval profit or loss goes to all three. Here. So let's proceed further. In this case, let's try to see some different adjustments. Like here they have told uh, at the time of admission of a partner, there is an unrecorded investment. So this is an unrecorded asset. Unrecorded asset is good. When something good happens, revaluation account is credited. So if you are asked the entry reval account is credited, what is increasing? Investment that gets debited. What is the amount? 50,000. Unrecorded liabilities towards supplier 1500. Unrecorded liability, bad. So revaluation gets debited. Sundry, we owe the money to them. We can call them as supplier or creditor. Next, a creditor of 6,000 not payable is to be written back. So that's reduction in creditors. Good for us. Credit reval, debit creditors. So this is how we'll pass the entry. We should know to whom profit or loss gets transferred. Now there is a question. This illustration is given in your Grewal book. This covers a lot of important things where we tend to go wrong. So let's look at this illustration. Here you are told value of furniture is increased by 10,000. Increase in furniture is good for us. Revaluation account when we prepare, it needs to be shown on credit side, furniture 10,000. This is the treatment of first one. If you're asked the entry, it will be furniture to revaluation. Amount would be 10,000. Any of these two could be tested in admission or retirement. Treatment remains the same. Even in death, treatment remains the same. Second, value of furniture increased to. This was by. This is 2. There was a change of 10,000. We record the change. Here it is increased to 40,000 rupees. So we should know what is the old value, 20. 20 becomes 40, increase of 20,000. So if you prepare in reval account, in credit side, furniture is increasing by 20,000 rupees. Entries are given here, so I am showing you the treatment in account. Third one, value of furniture is to be brought up by 120% of its value. I'll just erase this part. Value of furniture is brought up by 120% of its book value. What is the book value? 50,000. When it is brought up by 120%, 120% can be written as uh, if 120 by 100, 6 by 5. So this is 6 by 5. Book value is 50,000. So let's do a shortcut to do that. If you can see here, so this is 120%. So 50,000 into 6 by 5 is the present value of this machine, which is 60,000. and we have already shown in books at 50,000. So there is an increase of 10,000. So in reval, it will come on credit side. This adjustment is there in the current year sample paper also. They have told that the present value is less than what it should be. Okay. So it's brought up to 120%. So whatever it is, we need to increase it by 20% in a way. On the other hand, so 20% of 50,000, 10,000 can also be presented here. Next, stock is undervalued by 10%. Stock is undervalued by 10%. That means value of stock needs to reduce by is undervalued. We are given in presently in books. If you will see your balance sheet, over there stock is 18,000. This is less from what its value should be. Let the value be x. So this is x minus 10% of x in a way. But in exam, we don't have so much time to solve. We have to solve it quickly. So it's undervalued by 10%. I can alternatively say that 90% of stock is with me. So what would be 100%? So how we can solve this quickly is we can find out what is if 18,000 is 90%, what would be 100%? So we get that value minus from that 18,000. I can show you this amount here, 18,000 into 10 by 90 to get 100% value. 100% this will turn out to be 20,000. 20,000 is valued at 18, so there has to be an increase of 2,000 in the value of stock. Let's come to next one. Slight change in the wording is there. They say that stock is overvalued. Here it was under. Here it is overvalued by 10%. They have given stock at 22,000. Overvalued by 10. 100 plus 10, 110. 100 plus 10, 110. So this is 110%. So what would be 100%? So it would be 22,000 into 100 by 110. So that's the full value. Its value should be 20,000, but you have written 22. So there is an increase of 2,000 rupees. So we need to bring it down by 2,000 rupees. These two words and calculation, presuming it to be X is right, but it is a one marker or a half marker. We cannot spend time on that. So if this generalized thing is there in our mind, whether it is tested in admission or retirement, we can handle it. You can mark these two as very important, keeping in mind the current sample paper. Next, computer book value 20, market value 25, increased by 5,000. Next, machinery taken over by partner at 80,000. Book value is 60,000. So there's an increase of 20,000 which goes to reval. Now what is the entry for machine taken over by partner? Partner's capital debit to machinery account. Machinery is decreasing. Someone is taking over. Partner's capital is decreasing. His stake in business is decreasing because he will not get that much cash. He or she has taken that much of machine. But don't forget to show the change in value. That still has significance. It has increased by 20,000 rupees. It needs to be mentioned in the books. Next, one third of machine was taken over by Rahul at 30,000 and balance was revalued at 57,600. So that means we are valuing the machine at this. This is 87,600 is the current value, but book value is 72,000. So what do we get? 15,600, and it is increase. It's more than the old value. Next, out of the amount of insurance, we which was debited to P&L account, certain amount is carried forward to next year as prepaid expense. It could be unexpired insurance also. Prepaid insurance is prepaid expense, which is our asset. It comes in reval credit side. Then reval expenses come on the debit side. Like we have realization expenses, these come on debit side. If we give in cash, we use the word cash, otherwise partners names. It's not just in reval, it can be in realization also. A debtor whose due 14,000 was written off last year paid a certain paid 10,000 now. So this here amount of concern is 10,000. This is bad debt recovered for us. It will come in reval credit side. Another important thing, read the following words carefully. Increased by, increased to, by and to can change the answer. We need to see the change. If it is reduced by 25%, calculate 25%, deduct that. Reduced to 25% means 75% decrease is there. So that change goes wrong, answer goes wrong. So be very careful when you make such calculations. This is a good illustration to revise a lot of important points about reval which are covered in the current year paper also. Along with that, in this concept, in this chapter, one important thing about reval is bad debt, provision for debtors. We need to be careful about this also. We might be given debtors, say 50,000 minus provision 5,000. It could be given like this. Alternatively, it can also be given like this. There are debtors here and provision here. So we have to be careful provision is there or not. Now they can increase or decrease this provision. They can write provision is increased to 6,000 rupees. So change of 1. Increased by 1,000 also means the same. Increased by 50% will mean it becomes 7,500. Decrease to 2,000 rupees. So there is a decrease of 3,000 rupees. Debtors are all good. Then we don't need this provision. So it goes away completely. So when we prepare revaluation account, increase in provision comes here, decrease in provision is good for us, it comes here. So understand that. If you remember last year we did further bad debt and new provision. That is another point which is tested at times. If your debtors is 50 and you come to know there's another bad debt of 10,000 rupees, then the provision would be created on 50,000 minus 10,000. Say 10% has to be created. It could be same as this one. How much is this? 10%. So it becomes 40,000. On 40,000 when you create 10% provision, it's 4,000. So there the provision is changing to 4,000 rupees. And there's additional tension of 10,000 rupees. Out of 10, 5 we get from here. So 5 is additional liability plus 4,000 is the new provision which we are creating. So revise, reval very well. Reval helps you score well, at least in admission, retirement, and change in ratio questions. It is tested in MCQ the way we did all previous examples also. It can be tested there.